Hi folks, and welcome to the Financial Argument Channel. Today's episode is Bad Days Are Coming For Us with a Real Crash, the Stock Market Bubble, Massive Credit Bubble, and Zombie Companies. If you believe that the increase in the stock market isn't a complete bubble or that the dubious figures presented to you regarding the collapse of the economy are accurate and the whole global financial system is in a period of recovery, please watch this video until the end. Unfortunately, the current situation is not heartwarming, and this situation will not end well. We are now at a time where the global financial system's castles, which many thought were indestructible, are collapsing. Over the next few months, we will see that the financial crisis has only begun. Why do I think so? Let's begin. In fact, if you think this entire economic downfall began in January 2020, you're wrong. The system has been deteriorating for a long time. As you may recall, during the 2008 financial crisis, our Treasury partnered with insolvent companies and the Fed bought the debt of private sector companies, basically just printing money. While unlimited money printing is harmful in and of itself, trillions of dollars printed in recent months have been funneled by the Fed to private companies. As if this wasn't enough, on June 15th, the Fed began to buy corporate bonds, initially paying $250 billion. This will undoubtedly wind up costing trillions of dollars. So, what are these companies? What's worse, are these zombie companies the biggest threat to our collapsing economy? Large or small, all companies that make up the economic system can make a profit, lose money, or even go bankrupt. This is the normal way of things. You can call it financial selection or the circle of life for business. However, in order for the system to function properly, companies that make bad decisions, spending and investing incorrectly, must leave the financial system and make way for new ones. Thus, only the companies that apply financial wisdom survive over the long term, and others don't. Pumping money into these kinds of companies, ones that have already ended their activities and aren't creating a profit, creates zombie companies. Funneling money into these zombie companies isn't just unfair to American taxpayers as individuals and families, but is also unfair to Americans correctly running their businesses. This is exactly what we call an economic illusion. The term zombie companies comes from Japanese firms during the lost decade of Japan that needed constant support from banks or creditors in order to survive. But now we're using the term, especially in today's crisis environment, to understand which companies are about to become insolvent and go into bankruptcy. Since the beginning of the year, 2020, the number of zombie companies has increased. By the week of June 13th, more companies have become insolvent and filed for bankruptcy than at any prior time in history due to the economic collapse. In the United States, for instance, weekly bankruptcy filings have skyrocketed. The chart shows that between June 13th and June 20th, 13 companies filed for bankruptcy, which is a significant increase. Keep in mind that insolvent companies are only a fraction of all zombie companies. The majority of them are still in the market, making deals and transactions with healthy companies. Can you imagine what would happen if every zombie company filed for bankruptcy? Yes, insolvency and bankruptcy are two different things, but they are related. Insolvency is when a company basically cannot pay its debts on time. The company is still alive, yet if it cannot come up with the cash either by selling assets or reducing expenses, its creditors can seize goods used as loan collateral to get the money. Bankruptcy is a legal position where the company itself legally admits that it cannot pay its debts and will either restructure them or liquidate its assets, leaving the market. This is the next step for insolvent companies. And as I previously said, the number of companies filing for bankruptcy skyrocketed the week of June 13th. Yet this is not the whole problem. Most zombie companies are still acting in the market without being able to see their balance sheets. Nobody knows whether or not a company is a zombie. Additionally, 17% of the 45,000 publicly traded companies are zombie companies according to DataStream, WorldScope, and DB Global Research. In the US, while some claim 20% of publicly traded companies are zombies, others believe it's closer to nearly 30%. In addition, the rate of acceleration seen in the chart is an important factor as well, because each year the share of zombie companies in the market increases. This is sad but true. I'm not the only one who believes that zombie companies are a huge threat to our economy. On June 23, 2020, David J. Lynch of the Washington Post wrote an article called "Here's One More Economic Problem the Government's Response to the Virus is Unleashed: Zombie Firms." Lynch argued that one of these zombie companies was JCPenney, which filed for bankruptcy several weeks ago. I also mentioned this in my previous videos. There are many other companies like JCPenney out there. Okay, now let's get to the credit bubble part of the story, then we'll combine it with the issue of zombie companies. The reason why the Federal Reserve and other dominant central banks such as the European Central Bank, Bank of England, and Bank of Japan have all started printing money, technically called quantitative easing, is that they think credit plays an essential role in the economy and that they can use it to help the system recover. Particularly during a crisis, it's not just credit itself, but the inexpensiveness of credit that serves a crucial function in inflating the bubble. In the graphic, you can see how much money major central banks have been printing compared to their GDPs. The vital question, however, is whether all this printing of money has funded zombie companies. Before answering this crucial question, I want you to take a look at this chart. It's obvious in the chart that starting from the 1970s, total credit market debt has increased to significant levels. The 1970s and the credit bubble are significant, as this is when the gold-backed US dollar system ended. As I explained in my previous video, the United States unilaterally terminated the convertibility of the US dollar to gold, which brought the Bretton Woods system to an end. There were two significant results of this, one of which was the petrodollar system, and the other was the credit bubble. Right after bringing an end to Bretton Woods, the US dollar became a freely floating currency. This led the Fed to print more money and the creation of financial engineering tools such as collateralized debt obligations, for instance, which led to the 2008 global financial crisis. Anyway, the credit boom seen in the chart is indisputable, and there's been no correction of it. During the 2008 global financial crisis, major central banks did the same thing that they're doing today: quantitative easing. Despite the years of financial crisis set off in 2008, apart from the Lehman Brothers, companies somehow survived. And now the same central banks are doing the exact same thing. Whether or not they fund zombie companies, I don't know if today's quantitative easing will be sufficient for companies to survive. In my opinion, things will get much worse than we could ever imagine. The global system will undergo a massive correction. In relation to this, we are very close to the biggest collapse ever. There is already consensus in the markets today that the current situation is 3 times worse than the 2008 global financial crisis. This isn't only true for the US. Some officials admit that the European Union is also facing its worst crisis since World War II. Somehow the damage was supposed to be reduced by printing money, but nobody knows if it worked or not. Therefore, no one is sure what's going to happen over the next few months. I'm going to sum up everything I've said. The credit bubble has been inflated by printing money and financial engineering. This easy access to credit has created and funded zombie companies, and every time there's a financial crisis, these companies become insolvent and have to file for bankruptcy. The aviation giant Boeing, for instance, had to be rescued by the Fed. This means that Boeing is a zombie company. Boeing, one of the biggest companies in the world producing planes and numerous other products, is also a zombie company that's suffering from the consequences of being such. In order to have a safe and stable world economy, it first needs a gigantic correction. This is because of the credit bubble that started in the 1970s and has never faced correction. But this will lead to a new era for economies around the world, a completely new global order. Yet this correction won't occur on its own. Instead, it's far more likely that today's crisis will intensify every day, as it has been, eventually triggering the final collapse. 2 world wars in the 20th century were caused by the conflicts of colonization. What will cause the third one? The collapse of the US dollar, or the rise of Chinese technology and its economy? I think we will experience it painfully soon.